crude in North America has now dropped to about $55 US a barrel. Today, it hit the lowest level since early 2021. We're joined by Jason Schenker, president of Prestige Economics. Jason, thanks very much indeed for joining us. What is the latest on oil? Why does it keep dropping? Is it just fears of a glut becoming entrenched?
Yeah, thank you for having me here today, Andy. It's great to see you here at the end of the year. You know, I think there's a few things driving the price down. I think on the one hand, you've got increased optimism that there could be potentially a deal coming in the future in the Russian war on Ukraine, that there's some progress being made there, however slow, but that could be pushed along. If you were to see that conflict reach even a tentative armistice, let alone a longer term kind of peace, I think that would further weigh on crude oil prices. You've got that risk. At the same time, you have some risks of the global economy slowing, some risks around the US economy that have emerged. And we see the jobs data out just today that seem disappointing. And I think there's a number of factors there, but I do think it's primarily driven around the increased potential for that Russian oil at some point to enter the market, and that could weigh on prices.
And we have a chart, I think, showing the vast amount of Russian oil that's at sea, bobbing on the waves. And so if there was a deal in Ukraine, and let's hope there is, to end that horrible war, could a bunch of Russian oil just go on the world market abruptly?
Well, that would be the expectation. And even if it doesn't happen right away, right, we all know, right, there's a forward curve and there's an ability for the activity that would happen in the future to immediately get priced into the prompt month because we see it priced into those future contracts. So even if it doesn't abruptly enter, the impact price-wise could be abrupt across the entire forward curve. And of course, we know Russia's been selling this oil sort of off the global market to certain customers at deeply discounted prices. So if that oil entered the global market, then you could presumably see a further leg down in prices, at least in the short term, at least until the global economy strengthens. And of course, those manufacturing PMIs that we so often have talked about, which are key proxies for global manufacturing, global economic activity, they contracted for the US, the Eurozone, and China in the month of November. So it'll be really important to keep an eye on those going forward. But if you have a mix of more oil and global manufacturing weakness, that's a recipe for some bearish price action.
What do you, is Washington really after Venezuelan oil? Or, I mean, we know the administration talks about attacking drug traffickers, but I mean, Venezuelan oil is important to the United States, isn't it? Some of the refineries along the Gulf Coast need that type of crude.
Yeah, so some of that crude has historically gone into the U.S., right? We have seen that over time. I think that the situation with Venezuela is part of a larger national security strategy that has been shared out of the Trump administration by the president at the end of November. And we've seen within that document a focus on sort of a Trump application of the Monroe Doctrine, which is to sort of secure the Western Hemisphere. And Venezuela has long been at the heart of the axis of sanctions evasion, right? Having different collaborations with Iran in terms of crude and product swaps, having close relationships with Russia, where there's concern that Venezuela could be used as a military foothold at some point, and growing close relationships with China, where that's also something that I think the administration wants to counter. A lot of what we see coming out of Washington has everything to do with Cold War II, the conflict we are in right now, in which the United States and its allies are beginning to pit themselves more seriously against Russia, Iran, and Iran's proxies, China, North Korea. You can see this has been gathering strength. I know we've talked about this a number of times, and I had a book out on it early this year, which became an international bestseller. Cold War II is the big conflict of this century. And everything we've seen in the last couple of years in terms of conflicts revolves around this. And we see it in that explicit national security strategy, a desire to engage in various actions that can protect not just U.S. interests, but U.S. and allied interests, and can result in containment. A strategy used in Cold War I, rolled out by President Truman around communism. Containment was the strategy. That is also the strategy being rolled out in Cold War II, which has bipartisan support. And that means keeping pressure on China to prevent kinetic active warfare over Taiwan, pressure on Russia to bring the Ukraine conflict to an end, and then pressure on other sponsors of terrorism and narco-terrorism like Venezuela.
Jason, we better leave it there. If we don't talk to you before the end of the year, have a wonderful holiday and a great 2026. Thank you very much.
And you as well.
Jason Schenker, President of Prestige Economics.